Greetings, members, one and all of the Salivation Nation. Gold and silver rise for the right reason. Let's explore. Yes, take a look here. Let's see. Boom! They're both up, and they're up at a noticeable pace here, gold and silver. Platinum is actually down a little bit. Palladium's up, but they're down and up because of inflation. And I tell you what, the fear of inflation is the right reason to be concerned and for gold and silver to rise. Indeed, and that's what this is about. This is an article from Market Watch that talks about this. Gold futures ended higher Tuesday, with data showing U.S. consumer prices in March rose for the fourth month in a row, and the pace of inflation hit the highest level in 2.5 years, lifting the metal's appeal as a hedge against inflation. That's right. Now, you always hear me say that precious metals will protect you against economic instability. It's a general rule. But you know what? Inflation is a concern. It can also protect you against deflation as well. People miss that at times because usually during a deflationary period, there is this rush to buy, and the cost of goods and services actually may go down, including gold and silver, though those prices for gold and silver will not drop nearly as much as other things, which means essentially it is doing better than protecting your wealth at that particular point in time through that deflationary period. The article continues. The consumer price index jumped 0.6% in March. The government said Tuesday, spearheaded by the rising cost of oil. Economists polled by Dow Jones and the Wall Street Journal had forecast a 0.5% increase in consumer price index. The 12-month rate of inflation rose 2.6% in March from 1.7%. You may remember, as I've covered on this channel, is that the Federal Reserve is okay with all of this. They give themselves a 0.5% percent of increase in inflation as an acceptable level. But most of us understand that this is not good news. And by the way, it's going to be really bad news if we see the velocity of money increase, which sooner or later that's going to happen. That's what prevented essentially hyperinflation in the past, is a lot of those digitized printed notes that the Federal Reserve injected not into Main Street, but into Wall Street and into global markets. A lot of that money has not come back. It has not been repatriated yet. If and when it does, then you will see hyperinflation because you're going to have a flood of new currency. These bailouts, or these rescue packages, the coronavirus and the stymies as they're called, this injection of $1,400 on top of $600 on top of a prior $1,200 per American, well, hey, that is the beginning of it. And, it's money that's, well, most of it is going to pay for necessities, going into savings or what have you. But that is essentially the beginning of this money supply and the speeding up of that money entering into our economy. The reading came in slightly over expectations, as indicated that the U.S. economy is heating up a bit more than expected. Jason Teed, a co-portfolio manager of the Gold Bullion Strategy Fund, told Market Watch. He pointed out that much of inflation pressure came from rising gasoline prices and that core inflation was muted. Of course, they're going to say that. They want to try to make this as a non-panic mode as possible. These changes are largely expected to be temporary by economists, leading to an unadjusted stance from the Federal Reserve, said Teed, who is also director of research at Flexible plan investments limited. Now, keep in mind that yes, if they're playing a dangerous game here, the Federal Reserve is, but a lot of things could lead to an unintentional rise in interest rates in the bond market and the like, and that could turn out to not be so good and down the road, and it could lead to potentially a massive, deep recession, almost a depression type period, if we're not careful. I don't really know how we avoid much hurt and pain down the road if the velocity of money does increase, like some people think it will, with an overheated economy. Overall, gold is responding positively to the news, but short-term price movements in the metals are not an indication of long-term trends. Well, that's right, anything could change, and I think that's a good balanced view on this, but we know that in the long term, in the like I'm talking about within the next 5 years and more, we know what silver and gold do. They preserve our wealth, and that's the best thing we can hope for. But if there is a shock to the economy or a depression, once we get through the initial shock of it, I think gold and silver will then really shine and literally save ourselves economically as individuals that hold these metals. Overall, gold is responding to this news, and of course we know silver is as well. So we're seeing the movements. We'll take a look at the prices here momentarily again. Inflation will probably pick up further, and the numbers for the next few months may appear abnormally large as base effects from the 2020 lockdown skew the data, wrote Fawad Razakzada, a market analyst at Think Markets, referring to distortions in monthly inflation figures that results from abnormally high or low levels in the year ago period. And, I think there's a lot of people itching to get back into normalcy, and also itching to get into area and time where they can feel comfortable going out and about and doing things that they did before the lockdown. The Fed expects inflation to settle down after a temporary acceleration. However, the key risk is if their assumption turns out to be wrong and price pressures remain elevated. In fact, with consumers' inflation expectations rising, this could translate to an actual rise in price levels. And that's just it. Psychology is going to play a big part here. And the Fed, of course, is going to try to minimize the fear by trying to talk down any massive inflationary period. But they're playing a dangerous game as they continue to inject liquidity into the markets, and obviously they're all for this essentially was turning out to be almost in a sense a UBI, a temporary universal basic income. This could not end well, and it may be that we have a little bit of time here, but with each moment, with each passing day, that we continue what's known as modern monetary theory, or what I refer to as moronic monetary theory, because there's nothing smart about it. There's really nothing modern about it either. We've been here. This has been done before by other nations. It's just that we here in the United States have a hubris amongst this, thinking that, well, we're the top dog in the kennel in terms of reserve currencies from the IMF. So we can do whatever we want because there's nothing to get in the way. There's no repercussions because we're the best of the worst. The move for gold on the session thus far also comes as bond yields, which compete against gold for haven demand, move lower after inflation data. And the 10-year Treasury note was down 3.9 basis points at around 1.63% after the Consumer Price Index. A decline in bond yields tends to make gold more compelling to investors because precious metals don't offer a coupon. And so there you go, dividends. Yeah, precious metals don't pay them, so you go to the bond market. Of course, they're definitely manipulating the bond market to try to keep everything in order here for sure. I mean, they're just like they're manipulating the interest rates and the money supply. So silver is up, copper is up, $4.03 a pound. The metals, as you can see here, as of the recording of this video, getting very close at the end of the business day here on the 13th of April. Gold is up almost a percentage point, and silver is really the winner of all the metals right now, up well over 2%. So what does that tell us? That silver is much more volatile, as I've talked about, and we'll see how this plays out. And it has narrowed the gold to silver ratio slightly. It's just below 69, so still quite a ways to go before we see any kind of positive direction under 65, which is kind of the number that we've all been looking at and saying, hey, it would be nice to see these numbers come closer together to a moment of reality, or recognizability of silver being that monetary metal and that hedge. But this is a direct result of the right reason for the metals to go up. And to me, this is a perfect sign of natural market forces at play here, at least for today, with inflation fears. And inflation is coming, folks, in one form or another. It's already here. It's been here for quite a while. But what's the fear is hyperinflation. And that is something that we're closer to ever before to hyperinflation. And what does that mean? It does not mean that the dollar is going to go crazy and just start wiggling around in our hand. Oh no, what's going to happen? No, that means that the value of it's going to dramatically decline, and people will lose faith in it. Because you know what? People don't realize is that just because we're the strongest of the weakest around with these currencies, does not mean that Americans will have faith in it if it starts to really decline in value rapidly. It's going to send off a snowball effect with the dollar. And this is why I've said since the conception of this channel virtually, of why it's a good idea to hold gold and silver, why every American and everybody around the world really should have a little bit of gold and silver to protect yourself against the unthinkable, and some people feel the inevitable in relation to the dollar. And I think that this is something that could literally happen before there is a reset that takes place, which we're discussing right now, that will have a myriad of different factors tied to it. So gold and silver is where it's at as the ultimate protection and safe haven, the ultimate insurance policy. It is never a wrong reason to hold gold and silver, in my view. And this activity that we're seeing today with the rising of the gold and silver prices, though somewhat modest, I think is all the more reason to stack gold and silver. Let me know your thoughts in the comment section below. I'd like to extend a multitude. Yes, that means a lot, folks. I'm really thankful for you guys. Of gratitude, which means that I'm thankful for you guys. Multitude of gratitude. And I would encourage you to please hit that little notification bell. Yes, it may not work all the time, but it'll work enough that you'll know when the latest video is released. Share this video on any and every platform conceivable to man and beast. Share and comment and subscribe.